All right, welcome back from the episode of Carnivore Trades. Today is Wednesday, January 4th, 2023. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Before we get into it, I will be doing a 2022 review as well as the 2023 forecast. I'll try to have that out probably by this weekend. I know I've been talking about getting it done. I do kind of want to see how this first week shakes out, though. And speaking of which, take a look at the Whipsaw here. That's kind of what I mean. It does look like we're kind of, I mentioned this the last day or two. The first week or so of the trading year, you kind of get, sometimes you get kind of just a lot of whipsaw, a lot of position, kind of jockeying for position, rotation, stuff like that. And I think we're kind of seeing that the first 2 days. I know I said that on Friday we could get a gap and go. I think a lot of people probably had that same kind of idea, and that's why we didn't. We're not seeing that. And possibly, I'm still thinking this market can rally. But it does look like they are shaking the trees a little bit. And take a look at the action here. Obviously, the big headline of the day was the Fed minutes, and they're not going to cut rates in 2023, which I'm not sure about that. Maybe I'm wrong, but and we'll talk about that with bonds in a second. But shaking the tree, right? How do you shake the tree? What's a really good way to shake the tree? Punish the hell out of Apple, punish the hell out of Tesla, and punish the hell out of Nvidia. And they've done that the last couple of days. Although now Tesla, Nvidia, and Apple all green today. What's getting punished though? Microsoft, right? So they're kind of, I said this yesterday, there's kind of like a taking of turns going on. So some things are bouncing, some things are seeing some tax loss relief. PayPal, we just closed out a winner on that today, so 13.5%. Nice to start off the new year with a winner. I'd like to get that in the books right away. And, nice move. So this one's gotten a nice bid here. Take a look at the Jets. Nice power bid here, up 5%. That's really helping out. That's really a shot in the arm for the transports here. Some financials are acting well. So look at like JP Morgan. That's still up. That's up, now 8 days in a row, I think. So you're seeing some stocks and some sectors do okay. Again, home builders, again, with a nice day. We'll talk about those in a second. And then you're seeing like UNH, some gains being taken, perhaps. Take a look at the weekly here. That's losing that 50-week moving average. So again, it's kind of a mixed bag, another type of mixed bag day. Look at this. So just in the couple minutes that I've been talking here, we've just moved, a whole dollar on the triple Qs and, almost $2 on the spiders. But lots of whipsaw. Not a terribly unconstructive pattern here, all things considered. You have semiconductors outperforming. I did mention that to members earlier. I said, look, the semiconductors are holding up really well. They're actually leading the market. Semi's up 2.3% currently. And that does give you an indication that the market's likely to hold up after the Fed minutes. I said that probably, 30 minutes before the news came out. And, sure enough, the market is holding up. It's not, we're not having a great day, and there's lots of whipsaw, but it's holding up. And the VIX here, another thing too. The VIX, again, second day in a row, gapped up with the spiders gapping up. So that was an indication we'd probably see some volatility. We did. You can see volatility coming in the first 30 minutes, and then we got a nice bid. Looking at the spiders, we obviously faded that opening gap. And then the VIX never made a higher high. So that was another kind of red flag going into the Fed minutes for the bears. Another green flag, I should say, for the bulls is you see the Russell in the corner of my screen. That was holding up really well as well. Still not above that 20-day moving average, but it's it's in the upper range of yesterday's candle. So that was outperforming. Also, the transports were outperforming, and broker dealers, I like to see those outperforming as well. All those sectors kind of checking the boxes. By the way, Spider's getting a nice bid here, up now 0.75% on the day. When I see all those boxes being checked, usually it's a good leading indicator. Transports, semis, Russell. That's usually a good sign that the market is in pretty good shape. And then obviously the VIX never going green at all on the day. Nice pop here for the spiders. We're closing in about 30 seconds here. So we'll see if they can get us back above. Let's take a look here. Yeah, we're back above 38.50 there on the SPX. That's a pretty important level there. On the ES, we are above it currently. Yeah, so market set to close here. So that's a strong close here. Triple Qs are also catching up now. Yeah, so nice move. You see VIXY there at the lows of the day. Tesla actually with a pretty constructive looking, like kind of like bullish pattern here. So if that can get above 115 tomorrow, they could really put the screws to the bears. And really, I feel like this market's really just waiting on Tesla and Apple to rally. There is the closing bell. Let's take a look at the spiders or the SPX. Yeah, so they closed this about 38.50, so that's a positive for tomorrow. Again, some constructive things going on here. You still have that daily kind of bear flag look, and you also have, I know I've seen some others kind of making this kind of pattern here as a possible pennant. So with this trend line, the downslope or the downside trend line and this one here. So you have kind of a converging pattern and then also kind of an upsloping pattern there. Those are potential patterns to look at. I think once this starts to shake out, though, we will see a little bit more of a rally. And again, that's just really based off of cyclical stuff here. I know the technicals on the daily are not that good. Obviously, we just mentioned bear flag there. But again, like I said last week, the NASDAQ went down and tested pretty critical support. And I think it's due for a push higher, possibly up to this gap fill, possibly up to 280. We'll have to wait and see. But I think a lot of things are set up here for some type of a January effect. It's just that first week it really gets tricky as you have a mixed bag. Like I didn't have it on my bingo card that the Jets would be up 5% today. I don't think anybody did. If you did, congratulations to you. But there's kind of a lot of jockeying for position going on here. XLE again still under pressure as well. That did finish lower, although it did come off the low. So again, we are seeing a little bit of rotation out of energy potentially. We just haven't seen tech quite pick up the pace yet. Apple, I think if this can get going, if this can get above that red bar high, then it can really be a shot in the arm for the market. Same thing with Tesla at 115. And then, of course, I would say 119, which is this red bar high. You really see some push there. But it feels like the market's just kind of waiting for Apple and Tesla to kind of give everything the green light. But for right now, lots of whipsaw, lots of chop. JPM rolled their collar trade over into March. So, hopefully we don't have to deal with another month of this type of sideways action. But we're already working on like 3 weeks now of this sideways action. So who knows? But either way, really good, really mixed bag here. Now let's get over to, we mentioned the Qs, the Russell a little bit. Let's look at the semis. So semiconductors here, SMH just did not close above. So 206.77 was the high from yesterday. We got very close here today. If we could have closed above that high, that would have been a really strong signal going into tomorrow. And then the bigger level here is 208, so 207.99. If you get a daily close above that, this thing probably wants to go back up and back test 215. At very least, go up and fill this gap here at 212.13. If this happens, that's going to be a huge positive for tech and huge positive for the market. So keep that level, those two levels there on your radar for tomorrow. NVIDIA having a strong day here, as we kind of mentioned. Again, it didn't get above that high. Does need to get above this red bar to negate the inside bar. So 151, if you get above that, then this, is essentially cleared up to 160. But definitely some levels to watch here going into tomorrow. But, just lots of screw job here, like down, up, and not just down like a couple points. We're talking about $3 here on the spiders, $4 on the spiders. It's lots of whipsaw. So really just wait for those levels to trigger. And like if we get wait for the levels to actually break and, then take those trades. But at this point, just lots of whipsaw and really hard to position. Anyways, IGV, again, kind of an inside day. So yeah, again, yesterday, this was a sector that was up with, like I said, Apple, Tesla, NVIDIA being down big. IGV still up today, but not up like the semiconductors were. Lots of whipsaw, basically a sideways day. But it was up 69 basis points, so hanging in there okay. Again, I still think this can get up to 265, maybe 267. But yeah, nice little bounce there for IGV. We mentioned the transports here. This is constructive as well. So nice outside day for DJT. Let's take a look. So this pivot high here is 13,625. We just closed above that. So by 3 points, so we cleared this pivot. Now it's still not, it's still not the greatest looking pattern, but you did have a nice outside candle, right? So we wiped out all of this kind of bear flagging with today's move. We did stall at the 100 moving average, but we did close above that pivot high. So that's possibly constructive going into tomorrow, going into next week. Again, remember the transports lead by about 2 to 3 weeks. And what we're looking in the big picture is that's a failed inside bar with last week's close. So in a couple of weeks, we're looking for more downside. But for now, if we can rally up here, short term, that could give the spiders a shot in the arm. So let's keep an eye on that. Obviously, we mentioned the Jets. That has a gap fill right at 18 and change. Yeah, so 1806, and then that kind of level there. I think that was a weekly level. No, well, basically, either way, 18 and change is where we look for the Jets in the short term. Might even get up to the 200 moving average around 18 and a quarter. But that's a nice pop there for the airliners. I know Southwest had a lot of trouble with those cancellations. That got a nice bid today, but still inside of yesterday's move. Delta up nicely. And take a look at Boeing today. Huge move for Boeing here off the lows. This is really overbought. But yeah, nice move getting above that 100-week moving average. This is going into a lot of resistance, though. So if you own this, trail your stop on that. Anyways, okay, transports, interest rates. So let's look at the 10-year first. Again, back testing that trend line. And for those of you who aren't familiar, that goes way back. We got to go way back for this, all the way to 2002. You see broke down there, tried to break it, pivot, and we went into it. And now we're back testing it, essentially. But it got a bid off the 20 and 100 moving average, so it's holding up. I still think the 30-year has to go to 40.50. So that's right up here. But I will say, so I mentioned this briefly in the beginning of the video. Take a look at the 30-year futures. So another thing that told you the market was probably going to recover from the Fed minutes after that initial dump. So there's the initial dump. And look at the 30-year. It never broke this level. It never really broke formation. You pierced it for 1 second, and then it bounced right back up. And now it's actually above where it was trading before the Fed minutes. So, again, bonds kind of just calling BS. And I feel like I say that a lot on this channel. Bonds typically call BS in equity markets. But essentially, the big takeaway today was no rate cuts in 2023. But bonds are saying that's kind of BS. You go to the 2-year here as well. This is one really calling the bluff. It's not quite above that level yet from the pre-Fed minutes, but it's right there. And it never, it briefly made a new low on the day, but it recovered pretty quickly. So if this can recover, then again, the bond market's going to be calling BS on this move. So keep an eye on that. I still think the 2-year is in trouble, though, with that failure. So keep that in mind. But for right now, it does look like investors are saying the Fed's full of, you know what? And by the way, you know what else is saying that? Crude. Crude is down 5% today. Does that look like rates are going to get raised? I don't know about that. So anyways, over to XHB. Nice day. Power candle here up 2.5%. Again, home builders have been holding up really well lately. Beautiful inside bar pattern, and it's pushing now above the 50-week moving average. So this might want to go test the highs again. ITB here up 2.25. Again, nice move here. This can go up and test the highs as well. So home builders still holding up really well. Definitely respect that. I do think they will be a short in 2023, but they're holding up for now. Maybe they're just getting the last bulls on board here, but just respect them in the meantime. I will look to short these at some point in the future, though. VNQ, nice recovery up 2.25 as well. It basically stalled out at the 20 moving average. You just closed above support here, but I still think the VNQ is in major trouble for this year. XLF, again, it's just kind of a strange sector to be leading, right? So again, that's why I keep saying it's like a mixed bag here. We have financials holding up okay. Some tech stocks are holding up all right. Some of them are seeing a January effect. Some of them aren't. I think they all will eventually. But again, XLF up 1.6%, filled the gap, and just backed off of that 34.75 level. It did close above it, but again, you still have a lot of supply in here, and I am expecting lower highs in XLF. By the way, short term, you do have a little trend line there, and it looks like we pierced it and then closed below it today. So something to watch going into tomorrow. Might have to do some backing and filling there on the XLF. By the way, we don't cover it all that often, but XLV, this is in a lot of trouble here, and UNH is also in a lot of trouble, especially on the weekly. So if you get a weekly close below that 20 or 50 moving average, and you don't reverse it like you did back in June, this could be in a lot of trouble. So be careful with XLV here. But yeah, just thought about that. And they also have, for what it's worth, pretty good daily trend line break there. So be careful with XLV at the moment. Anyways, over to broker dealers. Again, same pattern. down move inside bar, still just chopping in this range. It could go up to 460, but that's really all I have penciled in for it at the moment. Anyways, back over to crude, down 5%. So big sell today. Take a look at the weekly. Again, bearish inside bar below the moving averages, right? So that is a bear bias. And I said this weeks ago. I said, look, as soon as we close below this green bar low on the weekly close, I said I would avoid crude right now until the mid to high 60s, and we never even really got down there, and we never had a big volume surge to let us know the low was in. So I think crude's going to move lower, and I'll show you guys this now. We're going to go over to a weekly. Everybody in the world is going to want to buy this 200 moving average. I think we can get through that based on the fact that we touched 70 essentially a couple of weeks ago, and then we bounced and put in lower highs. I think we're going to go through that. You also have the 50% fib here at 68.50. I think we go through that. I mean, we basically kissed it right there. So I think we can push through that and maybe pierce it. You could also make a case that you kissed the 20 and 100 moving average this week, right? With that little kind of like, basically tried to go up there and touch it, and it got rejected. So I think I would look a little bit, I would say probably maybe below 65 at this point. Or certainly below 65.44, which is where the current 200 MA is. I would look for just a little bit lower. You do have the 200 month or the 50 month moving average at 64.23, so I might want to go touch that. Might want to go test this monthly green bar low here at 63. So I would just be careful with crude right now. And yeah, nice little roll over there. Now, if it recovers, who knows? It could put in, again, like I said, it could put in an inverse head and shoulders, right? So watch for that. But, we're not going to jump in front of it until it tells us to. So I would leave crude alone. I know I say that every day, but that's been the right trade here over the last couple of weeks because it has not presented us with much of a case. Anyways, XLE, again, we talked about that as well. As soon as you lose these pivots right here, on a daily close, this is don't expect the 200 moving average to give this more than a day or two of support. You've gotten too close to it and you've consolidated above it. I would look lower here on XLE. I do think it wants to go down to this trend line, but it got defended today, so we'll give it the benefit of the doubt. For now, XOP managing to scratch out a 45-cent gain here. So not confirming this breakdown yet. And again, like I said yesterday, they supported it at that trend line. We'll give them that, but still not a great pattern here. I do think this still needs to go lower. And OIH, same thing here, managing to scratch out a small gain up just over $1. This is holding up better, but I do think this heads lower as well. Nothing has changed there. Nat gas, on the other hand, I do think this has bottomed. I would prefer heavier volume here, but I do like the hourly. So we kind of just really yesterday, most of yesterday, it was just a lot of selling with not a lot of reward, right? Outside of that first dumping candle. And now we've kind of recovered and we're putting in a bullish inside bar on the hourly. There's not a lot of volume on this, so it looks like they just used the pajama traders kind of just used that opening Globex gap to just push it down. So I think this can push right through that tomorrow, and I do think Nat Gas wants to go back up and test 475, 485, maybe even $5. But I do think Nat Gas has put in a low here at $4. It got just below $4 today and yesterday, but I mean, come on, it's down like 55% or something like that in the last 2 weeks. I think it's going to go up and at least back test 475. So I do think Nat Gas is trying to put in a low here. Dollar index. DXY inside day, nothing to make out of it. 25 basis point loss. Again, you stalled out at the 20-day moving average. I do think this heads lower here. Nothing has really changed there. Pattern is still the same. I had a nice outside day yesterday, but no follow through today. So we'll continue to watch that. But my thesis on the dollar is it still has one more leg down. Gold. Okay, so gold with a nice bid today, up to 1871. Can it get to 1875 tomorrow? Sure, yeah, absolutely. You see the GLD pulled off the highs. It had a nice recovery here, and it's holding up after hours here as I'm doing this video at 4:15. So it might want to go. And by the way, you do have a nice kind of old flag, right? So it's setting up. It can get up to 1875, but I would not expect much past that. So just be careful with gold here. If you own it, trail your stop. Take profits, do something like that. But I do not like it here. I think it's about done for right now. So just be careful with gold. Silver, same thing. I talked about this yesterday. We hit that trend line. We got a little bit of follow through to the downside today. There's that trend line going back to February. It's almost 2 years, or yeah, almost a 2-year trend line now on silver, but it did hold the 20 moving average. So it's holding up for now. Just be careful because you got the rising wedge here. So, and you got a rising wedge going into resistance. If you guys want to short silver here, you can. Just put a stop above 25 on a weekly close. And that's a really high risk reward trade if you ask me. So it might want to go back up a little bit and test 24.75 again. But yeah, I do not like silver here. I do have a bullish inside bar technically still on the daily, but that's a pretty good rejection. I think risk is definitely to the downside here on silver, maybe down to 21.50, $22, certainly in the near term. So just be careful with silver. Then platinum holding up really well. Again, up move inside day. It's hanging in there. Okay, this is starting to get a little lofty though. If we look on a weekly, you can see this is where, so we came down, we chopped around, we tried to push up, and then we got rejected. So we're getting close to resistance here on platinum. Ultimately, it goes a lot higher, but I would not chase it at these levels. And then copper here also backing off, touching that 50-day moving average there on the daily. Again, weekly, not a terrible setup. So copper hanging in there okay, but nothing's really changed, all things considered. And then Bitcoin also up 1% today. Let's get to the intraday. Yeah, so it had that kind of nice outside pop earlier and then faded really hard off of the Fed minutes. So it looks like they pumped it up pretty good into the Fed minutes, but you do have higher lows. So we'll see what it can do into tomorrow. I do not like this on the weekly time frame at all, as you guys know. Anyways, back over to the spiders. So a decent close here. Markets are basically flat after hours. NASDAQ shaping up a little bit. We'll see if we can get some rotation maybe into, I think the markets are really just kind of waiting on Tesla and Apple to bounce. If those two names can bounce, I think this market does get some traction going here. But again, we still have to respect this daily bear flag type look here. Again, upsloping channel. If you get a break above that, we can get up to gap fill, which is right around 390. And we'll just, see if that can happen. But don't really take too many trades here in the near term. There's just lots of whipsaw. Until we break these channels, you got to be careful with this market. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.